Now, after we have understood what management accounting means, we then divided the costs in lesson number 2. We understood the nature, the element, and the behavior of the costs. We now come on to the different costing methods which are used in day-to-day business life and the actual purpose of costing. So why do we do all of this costing? Why do we understand costs? Why do we use different costing methods? Why do we actually do any of this? So firstly, costing is very, very, very important to understand how you're going to price your product. Which means if you don't know the cost of your product, how will you create a selling price for it? If you don't know that your cost is $10, how will you decide what profit you want to make and how much selling price will you charge? You don't know that, right? So to understand the cost is very important because you want to price your product well. Secondly, costing your product well makes sure that you make good business decisions in terms of pricing your product, placing your product in the right market. If you are a premium product, then you don't want to be placed in an economy that is not doing well. You want to launch your product in developed countries. You can make these decisions only if you have understood the costing, the nature of your product. Thirdly, costing is important because it helps you record the costs in your income statements. So this management information is important to help you prepare your financial accountant, because if you do not have any costs laid out, how will you be able to write down the expenses? How will you able to write down the income? You won't be able to do all of that in a prudent way. So costing is important to record the costs as part of your income statement. Fourth, costing is important to understand the value of inventory that you have held. Now, at the end of the year, every business will have some sort of inventory, right? Either raw material inventory, either finished goods inventory, which they have stored in their, I'll say, warehouse. Now, what is the value of that material or the finished goods that are lying there? We'll only be able to ascertain that if we know the value or the cost of each product. It's very important to understand how much inventory I have lying in my warehouse, right? I just can't keep buying. I need to use what I have. So costing is very important to understand the value of inventory that is lying in your warehouse at the end of the year, because it's important to understand and then make good decisions based on what you already have, so you will buy less in the next year. But all of this value understanding can only happen if you have done good costing, if you've gone through the costing process. So let's speak about some common costing methods. We understood why costing is important. Now let's speak about some common costing methods that are generally used in day-to-day decision making. Remember, management accounting information is internal. It's used internally in the business. So any method that you use is prescribed by the business leaders, is given an okay by the business leaders. So management accountants follow the same and then provide their performance enhancing suggestions. But again, you can only do that if you have good business costs understanding. So the first method many businesses use is absorption costing. So absorption costing is a method that helps you find the full production cost per unit, the full production cost. But absorption costing uses only production cost to find costs per unit. So the formula is direct material. To find the full cost of a product, you imagine or you look at all the costs that were involved in making that one single product. So you can find absorption costing by, or absorption costing cost per unit by adding direct material per unit, whatever material you use to make that 1 unit. Then add direct labor, the labor charges. Then add any variable overheads like, electricity, like inspection costs, anything that was related to that unit. So direct material, you add labor to it, you add variable overheads to it. Now you are calculating the full production cost, right? So you'll have to add a proportion of the fixed costs as well. Direct material, direct labor, variable overheads are all indirect costs, or I'll say variable costs, which you are adding, right? Fixed costs also need to be added here. So what the absorption costing or the full production cost method does is it takes the total fixed costs and it divides it by the number of units. Total fixed cost, let's say it was 300,000. Number of units was 100,000. So 300,000 divided by 100,000 gives you 3. You add 3 to the total and that gives you your full production cost. So if as a management accountant, let's say you're sitting for a meeting and they mention we are using the absorption costing method, you'll have a light bulb in your head knowing that absorption costing means full production costs. Full production costs meaning variable costs plus the fixed costs have to be considered. I'm also going to give you a project on this. I'm also going to give you an assignment on this after this lesson ends. So you'll be able to practice your skills in a more, I'll say, practical manner, which allows you to test your ability of this understanding. Second method we are speaking about is the marginal costing method. So absorption costing we learned is full production costs, everything taken into account. Marginal costing, on the other hand, is a method that charges only variable costs to its products and services. So the important principle here to keep in mind is that fixed costs are not taken into account when coming at the production cost per unit. Fixed costs are treated as period costs. So the marginal costing method says that you can't do anything about the fixed costs in any ways, right? So from your total profit, just subtract it at the end. Why do you want any hassle? So marginal costing takes into account only and only variable costs. It says that marginal cost is generally, or rather the definition of marginal cost is that you take into account the costs that are extra to make 1 unit. So when I am making 1000 units, let's say for example, when I make the 1001st unit, what will be the extra costs that I will incur? Obviously material, obviously labor, and obviously some electricity charges or whatever. So let's only take this into account because these are my extra costs, right? That is the principle of marginal costing, considering variable costs only. So how can we find it? Very simple. You don't do anything about the fixed costs. Material plus labor plus variable overheads gives you the marginal production cost per unit. Whatever profit you get at the end, these are only the costs, right? So I'll do sales price minus the total costs, give me a profit. From this profit, I will remove my fixed costs at the end. Let's say fixed costs were 300,000. So from my total profit, I will remove the fixed costs. It gets me to my actual total profit. This is the principle of marginal costing. I will also give you a project or an exercise on this after this lesson. So you'll be able to test out your knowledge and see the difference between absorption costing and between marginal costing. So up until now, we've covered some major management accounting principles, some major concepts that you may have heard about at work in your accounting profession or in any, finance related field, but you didn't have an idea about. You'll start to have an understanding of these major principles as we go deeper into the course as well. I hope you've been finding it helpful up until now. I encourage you to try the project that I'm going to state in the next section. Stick around, there is a lot more important stuff coming your way.